welcome to the Personal Finance News Wrap. And today we're going to go through all those events that have happened in November which may affect your money life. Let's begin at the top. LIC has withdrawn stopped two of its term plans, the Jeevan Amar and Tech Term. They are apparently coming back with these plans, but after some modifications. So if you're already holding these term plans, nothing changes. But if you were looking to buy them, you'll have to wait for a few months till they come back in their new avatar. The second thing is fixed deposit rates. Slowly inching up. The RBI has been raising its benchmark economy interest rate, but fixed deposit rates have not risen at the same pace. Nevertheless, now for a 3 to 5 year fixed deposit, you can get anywhere between 6 to 6.5% when it comes to the large private sector banks like HDFC, Axis, ICICI. Some of the smaller ones are given even as much as 7.5%, but you have to be careful because they may ask you for a larger deposit, may ask you to keep money in the savings account, etc. Bajaj Finance, which is not a bank, it's an NBFC, is offering about 7.85% on its fixed deposit of, I think, slightly over 3 years. So you have to pick and choose, but remember, with higher rates, there is a slightly higher risk, so you want to balance that out and not just chase the highest fixed deposit rate that's available. Okay, what else? So there are articles suggesting that SEBI wants to try and intervene in the social media space where there is so much personal finance content which can affect your money. Now, this is a good thing because you're out there consuming personal finance content, but where the influencer is talking about trading strategies in stocks, options, cryptocurrencies, or any other financial asset which you may be, the content you may be consuming and putting your own money behind it. The idea is that there should be established credibility of the influencer in these particular assets who are telling you what to do. So SEBI wants to really look into it from a matter of investor protection and to see that, people don't get misled into different strategies around their money, which, later they regret. Okay, one important piece of news. SBI figured out that a lot of its customers were getting this kind of SMS asking them to give their PAN number because the SMS said that your bank account is going to be closed unless you verify it with your PAN number. Remember, just like we don't give out any kind of ATM pins, credit card pins, etc. on SMS, don't give out your PAN number, because PAN number is one of those ways to access a lot of information online, and as soon as you give it out, there could be some adverse effect on money lying in your different bank accounts, or even money lying in different securities, mutual funds, etc. So be very careful. SBI has issued a warning not to go by these SMSs, and you should really heed if you have received them yourself. The other piece of news is around capital gains tax. The budget is coming up in just around 2 months, and the whole idea is that the capital gains tax system may get reviewed because for different assets there are different tax incidences depending on how long you've held it. Especially long-term capital gains tax could apply after 24 months or 36 months depending on the type of asset you hold. So there is some proposal in the works, according to news articles, to kind of rationalize this, which will be good because it will be easier for you to manage your capital gains tax when it comes to filing returns. Now, at the start of this month, the US Federal Reserve increased its interest rates. How does this matter to us? It does because it kind of, if the Fed keeps increasing interest rates, they are doing so to curb inflation in their economy, which is really high. But raising of interest rates does have an impact on the dollar and does make money move or shift out of different assets, risk assets, into dollar assets. And so it does have an impact on our capital markets as well, because we are globally connected, at least as far as capital markets are concerned. Not a big concern for your long-term assets, but in the short term, it leads to some kind of volatility in different, like equity markets, bond markets. Indian equities, nevertheless, have been strong and have held up. Indian equity markets, in fact, have been resilient through this rate hike cycle and not really corrected quite significantly. It's important for you to continue your regular investments through this period and not get bogged down by what is happening in the global markets all the time. Last is a good news around crude oil. Crude oil prices are moving lower in the second half of November. Now that is good news for us because India imports up to 70% of its crude oil requirements, and that adds to inflation. If crude oil prices are going down, then that's good because we've also seen slightly high levels of inflation through this year, 7.5%. With falling crude oil prices, that could look better. So that's all from me on this episode, and stay tuned. I'll be back with more very soon right here on this channel.